Well, good evening. This is Hound Dog Steve coming to you on October the 26th, 2017. And, well, this is a sort of general overview of where we are with Bitcoin. And I'm also calling a WebBot hit. So, here we are talking about if Bitcoin bubble bursts, it will take down more than just Bitcoin. So, this is out of the money section in the Globe and Mail, and I thought it was kind of interesting because it's about the fifth article I've seen on Bitcoin this year in the mainstream media, and this is probably one of the softest ones. This is a sort of general overview and you know, maybe some problems that could happen with Bitcoin, but some of the stats in here are quite amazing. Okay, it says that in that run it has added roughly 90 billion in value. This is Bitcoin they're talking about, crossing above 100 billion for the first time on Friday before dropping back a bit. It's only a matter of time before it becomes a permanent member of the $100 billion club. This is the amount of funding or the money base contained within a business. And so it says, let me see, now worth more than a number of financial firms that would be its rivals, such as American Express, 81 billion, PayPal Holdings, 84 billion, but still less than real estate. And okay, recently the Bitcoin bubble guessing game has moved to transactions, which now equal $1 billion a day, compared to about 150 million in daily transactions in cryptocurrency a year ago. That gives Bitcoin value to transaction ratio of roughly 100. So this WebBot hit that Bitcoin would be appearing in the mainstream media, and some of the stats here that Bitcoin is growing, that it's grown from 150 million transactions, $150 million worth of transactions, sorry, to $1 billion worth of transactions in a year is, I would say, a staggering increase. I'm going to go over now to a story that I found on Zero Hedge, and it's called 5 Reasons Why Bitcoin is Not a Bubble. Zero Hedge. Bitcoin spikes back to $6,000. 5 Reasons Why It's Not a Bubble, by Tyler Durden. Thank you, Tyler. Okay, so 1. The growing acceptance of Bitcoin as legal tender. One of Bitcoin's biggest challenges so far has been acceptance by lawmakers and financial regulators due to its decentralized nature and its unfortunate association with criminal activities carried out on the dark web. However, Bitcoin's official acceptance is on the rise. In April 2017, Japan announced it would officially begin accepting Bitcoin as legal payment method, which immediately boosted the price of Bitcoin and has led to a substantial increase in merchant adoption across Japan. In the Philippines, citizens have been increasingly using Bitcoin to send and receive low-cost remittances. This has not gone unnoticed by the country's central bank, which announced in February 2017 that it will regulate Bitcoin so that the digital currency can be used as an officially accepted remittance system and thereby granting it full legal status. Countries such as Australia and Russia have recently made similar statements that could lead to Bitcoin becoming a fully accepted medium of exchange in their respective countries. This is a trend that is likely to continue given the growing demand for Bitcoin as an investment as well as an online payment system. 2. Increasing merchant adoption. In the early years of Bitcoin, merchant adoption was limited to a few brave e-commerce stores, usually run by early-stage Bitcoin enthusiasts. This, however, has changed substantially as leading tech companies and e-commerce platforms have chosen to accept Bitcoin as a payment method. Microsoft, Rakuten, and Overstock are 3 of the largest companies to accept Bitcoin payments. With Bitcoin's sharp price rally, increased media coverage and newfound acceptance in places such as Japan, Bitcoin merchant adoption is on the rise, and this trend will likely continue. The arguments for online merchants to accept Bitcoin are actually very strong. Fees are lower than credit card payments. Chargeback fraud is entirely eliminated. New customers can be reached in underbanked regions, and a new tech-savvy consumer base can be attracted. The more the merchant adoption increases globally, the more there will be a regular stable demand for digital currency, and given the current low rate of merchant adoption, there is substantial room for upside. 3. Bitcoin is increasingly acting as a store of wealth in distressed economies. Another reason why Bitcoin is most likely not a bubble is that it has a much-needed real-world application in economically distressed countries. In places such as Venezuela, Bolivia and Zimbabwe, for example, Bitcoin has been acting as a store of wealth and as an alternative spending currency as local currencies are weakening into worthlessness. This can be witnessed by the increasing Bitcoin trading volumes that are negatively correlated with the performance of local currencies and economic growth in distressed regions. Bitcoin also allows individuals and businesses in countries with strict capital controls, such as Venezuela, to receive much-needed remittances to stay financially afloat. In other words, whenever there is economic distress, Bitcoin demand will likely rise and Bitcoin adoption will grow. 4. Bitcoin has only just gone mainstream. You could say that 2017 has been the year in which Bitcoin has finally gone mainstream. 5 years ago, if you would have asked the average person on the street what Bitcoin is, they would have most likely given you a bewildered look. Today, most people have at least heard of Bitcoin and may even know that one Bitcoin is worth more than an ounce of gold. Now that Bitcoin has become mainstream, the buying potential from new investors is immense, especially as institutional investors have started to open up to the idea of investing in Bitcoin and other digital currencies. 5. Bitcoin's supply is limited. And of course, this, as Max Kaiser often says, this makes Bitcoin precious numbers. Just as gold is a precious metal, Bitcoin are precious numbers. Finally, one of the key reasons why Bitcoin has become so valuable is that its increasing demand is met with a fixed limited supply. Because of the way Bitcoin was created, only 21 million coins can ever be mined. Furthermore, the rate at which new coins are created slows down over time, which means that increasing demand for the digital currency is not only met with a limited total supply, but also with a continuously slowing supply. The discussion of whether Bitcoin is a bubble or not will likely continue indefinitely, but the comparisons between Bitcoin and early internet stocks does not hold true to the fundamental differences between the two asset classes. Bitcoin. We like Bitcoin. So there you go. Bitcoin is gaining more and more public acceptance. I'm calling this a WebBot hit, and I think we are going to see this growing in the future. Anyway, I hope you enjoyed this little vignette. I'm trying to keep the videos down to, especially the information videos, down to a much smaller time space to make them easier to watch. Okie dokie, well, you take care, you have a great evening, and we'll be talking to you real soon. See you now.